Good morning, everybody. It's the 20th of October. We are Signal Centre Talking Ball. I'm Joe, joined by Steve and Taff. Good morning, gentlemen.
Morning.
Morning,
Good
morning.
morning.
Both very happy with their team's performance yesterday evening. So,
Yeah, not
yeah,
bad.
This was really,
smiles all
really,
round.
really good, man. Yeah, really good.
Hoping for the full house tonight. Arsenal take on the mighty PSV Eindhoven. So let's see how
Mm.
that goes.
Yeah, I'm sure Saka will put that in the bag.
Let's hope so. Though hopefully he's not playing. Give him a rest, poor lad.
Yeah.
Okay, so another tumultuous day yesterday in not only markets but in the UK political scene.
Politics.
Really is a mess. We'll come on to the latest headlines in a minute. In terms of the other headlines that were moving markets yesterday, we had mixed US housing data. The housing starts declined to an annual rate of 1.44 million for September from a revised number of 1.57 million, below the consensus forecast of 1.48 million. US yields surged to fresh 14-year highs yesterday. Although the US data was mixed, there was a sharp selling in US Treasuries, with the 10-year yield increasing to a fresh 14-year high above 4.1%, amid expectations that the Federal Reserve would have to be even more aggressive in tightening monetary policy. US dollar, Japanese yen tapped the 150 level. The dollar overall maintained a strong tone, and dollar yen challenged the 150 level, but with some reluctance to push the US currency above this level, given the persistent intervention threat. Now we get on to the UK political chaos. The UK Home Secretary Braverman resigned on Wednesday, although officially it was due to a break in the ministerial code. There was also very strong criticism of the government policy and an open call for the Prime Minister Liz Truss to resign. The government overall remained in total chaos and close to collapse. The Canadian inflation number edged lower yesterday. The headline, the Canadian CPI inflation data, read a reading of 6.9% for September from 7% previously, and although that was still slightly above the consensus forecast at 6.8%. And we had some job numbers overnight from Australia. There was marginal employment gains. The Australian number reported an increase of just below 1,000 for September, compared with expectations of a 25,000 increase, while the unemployment rate held at 3.5%. So that's that for the latest headlines. Let's take a look at some of the markets that are being impacted by all this. Taff, would you mind kicking us off with a look at crypto and
Commodities.
commodities?
Yes, sure. Let me just start with gold. Yeah, there you go. So gold was with a really nasty looking bearish candle yesterday. This is on the backdrop of strength from the US dollar. I think the US dollar really, the bulls came in and then they pushed the dollar further up yesterday, and gold responded by just plummeting, going down. It broke this support that I had put here, and we seem to be trading close to this major previous swing low. Let's see what that looks like on the intraday level and what our levels are looking like there. So here we go with gold. So gold pretty much respected this. I put this trend line, this dashed trend line, and then it pretty much respected it. Tested it, came down, tested it, came down. What we're seeing was just a series of lower highs, and that just meant that the bearish momentum was still there. And I envisaged that momentum to still be there today. What I'm really looking for though is for price to come up to the first resistance that I put here, retest it at 1641, and then from there probably get some liquidity, and then come back down and really get into this zone, this 1615 to 1621 zone. This is my ultimate target for the shorts that I envisage here. So I want price to come up the first resistance. If it breaks it and then it's got momentum to go further high, it might break this trend line, but that's a bit unlikely, and come up to the second resistance, which is also a bit unlikely. But with the markets, you can never really be certain of anything. But my trade is the first resistance and coming down here to the coming down here to this support zone. We have another zone which is further down, but I don't think we're going to really. Okay, this is another zone here further down here. So, but I don't think that price. I don't think today we're going to see activity into this. I think this is the zone that we're going to play it today, in terms of gold. Let's go to oil. Oil is interesting because of the announcement that came out yesterday, the geopolitics behind it. So the US announced yesterday that they're going to release those strategic petroleum reserves. I think about 15 million barrels. This is in response to that OPEC plus meeting. So that it's going to be interesting because the whole thing with the US, it looks like it's a bit political because the midterm elections coming up and they don't want the price of oil to go higher than it is. So what's also interesting is that from the time they release up to when the barrels get on the market, there's about a 13-day lag. So I would really be looking at it'll be interesting to see what happens here. 13 days from the 19 is around 1 November. So it'll be interesting to see what happens here on this line that I put here. So we just take a look at that. But on a technical analysis basis, yeah, we had a bullish engulfing type of candle yesterday. Momentum, there's a lot of momentum in oil, but we're looking at resistance that's coming up. Let's see what that looks like. Yeah. Yeah, so we had a lower high at this 89.55, and then we broke this highlighted zone here. We tested it. We broke my first support. We went to the second support again, and then it seems to be holding. The bulls came back in, and then now we seem to be targeting this first resistance zone, which is 87.14 to 87.70. This is really where my money spot is for a continuation of the bearish momentum. So I want price to come up. I want to see rejection on this first resistance, this highlighted zone, 1870 to 1814, and then from there take shorts, put the stop slightly above that zone, and then possibly target the first support 84.96, second support 83.29, and then unlikely, but it could happen, we could go down all the way to 81.42. That's the bearish view. The bullish view is price comes down to the first support, which is 84.96. We get some liquidity. It goes all the way to the first resistance. It faces a bit of resistance, but then eventually it overcomes it. If it breaks through, tests the resistance again, it becomes support. Then we're looking to probably target the 89.55, which is the second resistance here. So it can go both ways. But my bias for oil, just like for gold, is we go up and then we sell all the rallies that we see. Let's go to natural gas. Natural gas, it broke our medium term trend line. Let's see what that looks like. Yeah, so we broke our medium this trend line here. That was stretching all the way from January. So we eventually broke it, and then boy oh boy, we had so much bearish momentum. We've had 3 days of consecutive bearish candles here, and then we seem to have opened kept up a bit today on the opening, but I envisage that bearish momentum to continue, but we need a bit of retracement. Price cannot just keep going down. It needs to retrace a bit. If we look at it here, I have a resistance, my first resistance, which I laid out, which is around the 6,000, 6.000 zone here. And then we have a second resistance, which is not as strong. I envisage it not to be as strong, which is about 6.241. And then we have this third one, which is about 6.5. 6.5. So what I want price to do is I want it to come to the first resistance, get rejection, and then come down. My ultimate target is this support area here, which is 5.4 to 5.49. This is my ultimate target for the shorts. I want price to come here, get rejected at the 6. And 6 is quite a significant number as well. At the 6 level here, then we take it down. If it does, however, manage to break right through, then I'm looking for it to be capped by the second resistance, which is 6.241. If we look at it again from a channel perspective, we could really try and put like a bearish channel here. It's really it's really a really sharp sliding one, but again, if we're going to put this as a channel boundary, then it means that this is a very good confluence area for taking shorts, the 6-0, because it coincides with the trend line and also that level zone. So I'm looking for bearish momentum to continue here all the way to that support zone. Let's look at Bitcoin. Bitcoin is quite interesting because we had a series of So we had a trend line. We had a trend line from Wednesday, the 21st. This trend line here, it was respected here. It was respected there. It was respected here again on the on Saturday. But then price then broke out and just went through right through it, and came down. But then we can see that there's a level here. I think it's 19. It should be 19. Yeah, 19029. That price just can't seem to close below it. So price respected it here. It's respected it here on Tuesday again. On Wednesday respected it. On Thursday we had a long wick, but the close was eventually above that level there. So this is a level to really watch out for. We have another trend line that we observed coming from all the way up here from 24. It's 2450, and we had a touch here, a touch there. Let's go to the intraday and just really expand on what I'm talking about. So the second trend line I'm talking about here, it was with the second touch there, with the third touch there, and then another touch there. So this can be quite significant. And then this is that support level that I talked about on the daily, that 19029. Price is respecting it. But my overall theme here is I think Bitcoin is going bearish. And I think as soon as we break this first support, I think it's just going to release all the bears, and then we'll see a lot of capitulation, probably going to the second support, which is around the 18200 zone. But for that to happen, I want to see probably, you can see there's a bit of momentum coming here. I want to see price come up to this first resistance here, which is quite close. It's 19300, 19309. If we get rejection from here, then possibly we're going to go all the way down. If not, then I think price will be kept by the trend line, which is my second resistance, this whole trend line here. So if we break here, then I think price will be kept here, and then eventually we get rejection, and then price will go all the way down. So I'm bearish on Bitcoin, and I'm looking for any rallies to be sold at good levels. Yep, I think that's it on commodities, guys.
Okay, nicely done, Tef. Thank you very much.
Thank
Let's
you.
take a look at FX then, and then Steve can give us a roundup on the indices. So FX wise, obviously starting off with the dollar index, still in good shape overall. The daily trend still very strong. If we look at yesterday's price action, we can see a really big green candle posted following 2 days of decline. Not quite been able to retake the levels that we saw on Monday at the highest point that it traded, but still looking pretty robust and pretty strong. Quite flat as things stand at the moment, but still no signs of dollar index slowing down. If we take a look at some intraday levels just very quickly, just to see where price may go on an intraday basis, we have some support, which was resistance highlighted yesterday. We saw it broke above that, pulled back quite nicely, and continued to trade to the upside. As it stands so far, we've seen a little bit of decline since the open at 10 o'clock last night for the close from the previous session. Pulled back to that support again at 112.69 and posting an engulfing candle as things stand, only 15 minutes into that candle, so still very early in the session. In terms of resistance above, I've highlighted 113.22 and then potentially, although we've got a swing high here from Friday at 113.42. I think if we can get above this resistance, then we'll be targeting a move back up to these highs at 113.92. That was the high from Thursday last week. Moving on to Euro US Dollar. Still within this bearish channel that we've highlighted now for some time. Very neat indeed. We've got resistance up here at the upper end of the channel around 99.55. If we look at yesterday's price action, we posted an engulfing candle, engulfing all of the previous day's gains. And moving quite steadily lower. Price is flat today, posting a doji as things stand, still very early in the session, of course, but ultimately looking for lower prices there. In terms of the intraday setup, we've got some support highlighted at 97.51. We saw a pullback to that level yesterday. We pulled up just in front of that. And we are ticking a little bit higher, but over the last hour or so, prices have dipped ever so slightly. So that's the support to watch for today. If 97.52 gives way, then we'll be looking for a retest of these lows from Friday the 14th at 97.07. On the upside, it needs to really get above 98.75 before we can get excited about maybe a higher correction on Euro US Dollar to potentially challenge the upper end of that channel that we've spoken about on the daily chart. Looking at cable, similar situation here. still very much in a downtrend, obviously all over the place because of what's going on with the political situation in the UK. It's creating all sorts of havoc, which isn't great trading conditions really, unless you're very light on the mouse and can get in and out of these positions quite quickly. But we rallied into resistance yesterday at 114.10. Has been resistance now for a couple of days, and it's prevented prices from moving higher. On an intraday basis, let's just take a quick look here. So we have filled now that gap, and we did that at 6 o'clock yesterday on the pullback. And typically, as you'd expect with gaps on charts, they do often get filled, and they can provide decent levels of support, which it appears to have done here. So prices have been moving sideways around this level and started to rise up over the last couple of hours or so. So let's see if it's got any potential to move higher later today. In terms of the ranges for today, we are trading at the lower end of the range. So the upper end of the range comes in around 114.30. So from a risk reward perspective, buying, providing that this support continues to hold, looking to target this resistance up here would not be a terrible idea. But you've got this political situation that's ongoing, so volatility could happen very fast and very suddenly if anything is to change, which no doubt it will. So be careful there. Looking at dollar yen, that tapped the 150 level. No, let's go back to the daily chart first, which we put a line on the chart just because it was a significant level, really, not really anything technical, but maybe a point at where we may see some sort of intervention at some point, because this really is getting out of control and has been now for some time. But 150, I think, is maybe a psychological level that will mean that we do see some intervention maybe from the Bank of Japan. There's not been any real speculation about that, and when they have mentioned intervention before, hasn't really done anything. So still very weak. I mean, if you look at how many green candles we've got in a row there, Steve, that the rule of 9 has been totally kicked to touch there. Nothing, nothing slowing down there at all. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days of gains.
But the 13 the new max. It's like
the new max is 13.
DMARC theory, 9s and 13s.
Yeah, maybe so. So we'll wait and see what happens there. But in terms of where to trade that, I mean, I don't know. I don't want to buy it up there, and I don't particularly want to sell it because it looks so strong. So I think that's probably one that you should maybe leave alone or look for other assets to look at in FX. Have we had any other requests? No, that's all good. So I'll leave it there for the FX markets, and Steve, you can run us through some indices.
Okay, I'll share my screen now. Looking at the FTSE really to start with, obviously a lot of skullduggery, a lot of volatility over the last week or so. FTSE very much under pressure. I'm going to show you just the main area of support that we've got, going all the way back to earlier this year, earlier last year, sorry, May 21. We've got 1, 2, 3, 4, 5, 6 times we've sort of like got down to this 67.80 level. The last time we got close or went through it, we spiked down to 67.06. That was like last Thursday, and we're a week later and it doesn't feel like much has changed. We got a decent rally back up to resistance at 7,000, but price action held there, and yesterday's bearish dark cloud cover candle was pretty well. It's probably more a bearish bearish indecision really. It looks like almost a shooting star, not quite. On Tuesday, Wednesdays, almost like a bearish engulfing, nearly a bearish outside candle, so negative. And today's price action has been on the back foot. We've already been down to yesterday's low at 68.94. A break of there, and we should really retest this 67.80 to 6800 level. But as I say, probably the support to really watch out for is closer to 6700. On the upside, prices need to get back above 7,000, hold above there for us to sort of like stave off this bearish impetus at the moment. Similar sort of candle in the DAX yesterday. We saw this projection higher that we saw. It's ABC correction. We got up to 127 Fibonacci extension level and stopped there, stopped in its tracks. So that was at 12,945. That was yesterday. Yeah, eventually we closed down at 12,737, close to where I was putting on my gun to head trade yesterday afternoon. But yeah, probably it was the right idea at the time, but as Joe was saying, trying to sell a break looked like a decent one to do as well. It didn't really do anything. It sort of went up and down and held around there. But today we have sort of formed a new low, got down to 12,644. So under pressure as we sort of like go into this morning session on the DAX as well. So resistance coming in 12,945, support now at 12,645, and a break there should open up again the downside. If we're looking at where we could then sort of like look for price action to move to, we get the fibs, draw them up. Even on, if we look at this candle, a 61.8% fib would take us down to 12,358. That would be where the support comes in. 12,470 would be a 50%. And if we took that from the swing low of this move from the 3rd of October, we're looking at different levels down at 12,375 and below there, but support really coming in closer to the 12,000 level. That's where we reacted from. So yeah, levels to watch in the Germany 40 or the DAX. On the Dow, hanging man candle posted yesterday, again negative, and it didn't take out the previous day's high, so more negative. So that leaves us with really sort of like focusing on breaking this yesterday's range or the previous day's high would be quite significant. So we've got levels coming in. 30,210 is the low that would be targeting today. Break of there should open up the downside quite nicely. And again, from a fib perspective, targets would be maybe a move to down to around about 29,500. So a nice overall move there, nice risk reward after yesterday's if you're just trading on a candlestick perspective, and price action stalling and this downward momentum, downward trend continuing. You can see the sort of like the average 2 ranges elevated slightly, so we're getting sort of like ranges in the Dow of about 700 points on average, so quite volatile to say the least. So definitely more volatility to come, and I wouldn't be surprised if we do eventually get a break of this 30,200 level, that further downside is seen quite quickly. Nasdaq is also another one that looks a little bit shaky at the moment. Again, very close to a bearish engulfing candle yesterday, stalled or closed just above the previous day's open. If we'd have closed below, then I'd be a lot more bearish. Resistance now comes in the form of the previous day's high, 11,378, and really a break of today. Well, we've already had a break of yesterday's low, and we formed a new low coming in at 10,963. Again, this seems to favor selling in line with the overall trend and negativity. The tech sector, there's a lot of earnings results coming out at the moment. I think it was, who was it yesterday that sort of didn't get Tesla? Was it Tesla? Didn't really sort of hit the mark yesterday, so that's under pressure, and we this will filter through into the indices, I think, today, especially if we get a few more like that. So overall, I'm pretty bearish on the indices after their most recent correction higher. Again, we haven't been able to take out the previous swing highs, so lower highs, lower lows seems to be the trend. I can't really see anything stopping that. Next real level of support in the Nasdaq down at 10,400. I mean, that's 600 points away. It's not a bad, again, not a bad sort of like risk to reward trade idea, just sort of like selling into rallies or getting short around these levels and keeping your stop quite tight if you're looking at it from a more short-term perspective. Very briefly, I'll take a look at S&P, same sort of price action, same sorts of candles. Resistance coming in at 3,767. Support, again, we've got down to yesterday's low today. So 3,666, the sign of the devil. So yeah, and Fibonacci wise, targets would be a move down to around about the 3,600. So 666 points available there on a nice, like, well, I mean, it's not quite a 2-to-1 risk reward, but if you took today's high as the your ideal stop area, it's probably, what's it, 666 or 66 points against 33 points. So a nice 2-to-1 risk reward there. Not bad.
No.
Any other markets that?
Is it worth taking a look at Tesla because they had report earnings yesterday?
Yeah, sure. If I can find it, let's have a look. Should be around here, shouldn't it? Tesla.
Type it in if not.
Here we go. Tesla. What market should I look on it at? Let's have a look at it on here.
Oh,
ouch! That hurts,
that's
mummy.
a CFD price.
Yeah. That's the that must be a stock split thing as well, surely.
No, that's the earnings, right? It's a one. Oh no, yeah, it would be the stock split. Yeah, maybe not the best chart to look at then. Look at the just TSLA should be fine.
It's not doing it, Joe. It's not doing it for me, mate. It's all going wrong
Here.
live on air. No, I've got it. Yes, so this is the adjusted chart, which takes into account the stock split. So yeah, really nice reaction. Oh, I like this. Really nice reaction here. Good support coming in around about the $200 level. Reacted higher, and then yesterday, bang, up to 230, and overnight it's not going to be looking as good. So this is it on a 4-hour basis. We've seen it stall at here we as I say 230. This doesn't indicate where it's opening though, Joe, does it? Pre-opening levels or whatever?
Yeah, I don't think, no.
No, a bit early for you boys, is it? But yeah, it was so that was that after hours
yes
figures, right? So let's see how that filters through. But obviously the level that we'll all be watching would be around about the $200 level, and or 210, be a bit more specific. 210.
And I mean, if you go back on the weekly, you can see there's basically it's like a big top.
Yeah. Yeah, I mean, if we also look back here, 180, that'll be sort of like the next sort of like real level of support. But you can see the sort of like the big reversal from that 315 level, 61.8% fib, bang. See you later, sayonara, baby. So yeah, I wouldn't be surprised to see this turnaround, follow through, and even get to 180 before the end of the week, maybe. Oh, that would be a concern, but it would help my Nasdaq short.
Thanks, Steve. Okay, one request actually on Aussie US dollar. So we'll take a quick look at that as there aren't loads today. So Aussie dollar on the weekly chart, just sort of bring it into context first of all. Overall, the trend remains bearish from the highs that we hit back in February 2021. Since then, prices have been moving lower in line, obviously, with the dollar strength that we've seen. We broke down through this support level at 66.73. That was back in mid-September. Then we came up against this 61.8% fib level, this entire up move. Did nothing really to prevent prices from slipping lower. So now looks as though we're heading towards this 78.6% fib level at 60.41. Bit of strength obviously this week following a bit of a rout on the currency over the last 5 or 6 weeks. Volumes obviously increasing as well, as we can see here, particularly last week on that big bearish candle. So that would indicate further selling pressure is being seen on Aussie US dollar. Taking a quick look at the daily, see if there's anything there that's interesting. This obviously just shows the slide lower in the price of the currency pairs, and no real indications of a turnaround. We did see a bullish hammer form there on the 13th of October, but not really seen any follow through to the upside. So For now, it looks like the pressure is set to remain on the downside. We've obviously got this 78.6% fib level in view, which I think is going to be targeted. So I would be looking to sell rallies on that for the time being, unless, of course, there's any major turnaround in the dollar index. But at the moment, that doesn't seem to be the case. If we look at the intraday charts, if that's your preferred time frame, then you could argue that we're in the process of forming some sort of short-term bottom here, some sort of rounding price action taking place. We have stalled without making a new low around 62.28 and had a nice reaction to the upside. So if you did want to play that on the long side, then I'd be buying around current levels, targeting a move up to this resistance level at 63.42 and having a pretty tight stop below this low from the 20th of October at 62.28. So all in all, overall trend remains bearish, but maybe, you know, if you are looking for a riskier play, then there could be something on offer today in the very short term, but bear in mind that the overall trend remains pretty nasty. Hopefully that helped. Okay, let's move on to the gun to the head trades then. So this is where the three of us pick trade ideas live on the video. Each of the ideas must have stops and targets. All of the ideas are placed at market and must have a risk reward ratio in excess of 2 to 1, meaning every dollar that we risk, we're looking to make a minimum of 2. The trade ideas will expire at 9 p.m. UK time or when the stops or the targets are hit, and they are posted up to our TradingView profile. So if anybody wants to check them out, it's easy to do so. You just go to signal_center on TradingView and you'll see the trade ideas that we published up over the last few weeks and months. So just a quick recap on yesterday's ideas. Steve was buying the German DAX. And he was into a major support level when he did that yesterday. So from a risk reward perspective, that was a really nice setup, looking for a 4 to 1 return on that one. Initially saw a decent bounce to the upside, but following on from that, we saw further losses as the US markets woke up and didn't fancy it yesterday. So sadly, Steve was stopped out. I was looking at gold, expecting that to remain under pressure due to the dollar strength that we've seen. That was breaking down through a support at 1640 yesterday and continued to move lower. It was on side 0.95R on that one at 9 o'clock yesterday. So between us, we kind of washed our face with our trade yesterday, and we go again today. Taf wasn't on the video yesterday, so we did congratulate you yesterday, Taf, on your Bitcoin win from the day before, because I think you had a 3.8 win on Bitcoin. So well done to you.
Yeah.
Do you want to go today first? Have you got one ready?
Yeah. Let me go. So I'm looking at silver. I'll stick to the commodities here. I'm looking at silver. I've got this really nice looking trend line here. It's stretching all the way from last month, the 1st of September. It was respected here. We kind of touched it here and really had bullish momentum. The same thing happened last week, and then now we're seeing already we're seeing this bullish engulfing here on the 4-hour. So I'm going to take the rejection of that. Let me just go to the 30 minutes so that it's a bit more clearer. So yeah, so I'm going to take rejection of that trend line, and hopefully the bulls can. There you go. Okay. Hopefully the bulls can really push it further up. We could be having some sort of double bottom formation here, but it's still too early. We need probably validation. But I'm going to take this now and hope the bulls can push it all the way to 1900 level. So my entry will be at market. This is 18.44. I'm looking to target 19.04. In fact, let me just put that at a 00. Yeah, I'm looking to target 1900, and my stop is okay. I have to adjust it a bit to make the risk reward look a bit better. Yeah, okay, there you go. Yeah, so I'm looking to target 1900, and then my stop is at 18.19, and my risk reward is 2.24. Yeah, so
Very nice. Good luck.
yeah, see how that goes.
Cool. Steve, you got one ready, or do you want me to go?
Yeah, I got one ready.
There you go.
Looking at Nasdaq, and I'm going to go with the bears in it.
Shouldn't have let him go first, man.
Yeah, well, we
You
could
shouldn't.
do the same thing. It's all right. I'm not sort of like going to hold court on it, but I'm yeah. So I'm basically going with this after yesterday's like bearish dark cloud cover. and the hourly candle, shooting star candle, selling it here. Levels 10,000. Sorry, selling at 11,018. Let's just round it down. Selling at 11,018, targeting a move to 10,718, which is will be a basically the sort of like the measured move target of this double top formation. And well, in front of it, 10,718, and stop at the swing high above the shooting star. There you go. I'm not going to say any more. Let you have a go, Joe.
Yeah, well, I'm not going to go with that now, but I am going to stick with indices, and I'm going to look at DAX again, and I'm going to sell it now at 12,640. So looks to be taking out the lows that we posted overnight, so making lower lows in the very short term. So let's get this on here and mark it up. So I'm going to go with a stop loss at 12,766. Above the high that we posted at 6 a.m. this morning. And in terms of targets, I'm going to look for a move into this level here. 12,350 will do. So that gives me a risk reward ratio of 2.38R. If that plays out today. So we'll get those published up. I've got to redo mine now because it was for Nasdaq, but that's okay. And yeah, that's 3 trade ideas that will be published up to our channel very shortly. Okay, data wise today, let's have a look at what we've got. We've got the US Philly Fed index at 1:30 UK time. We've then got US jobless claims at the same time. Later this evening, we've got earnings from Snapchat, American Airlines, and Dow Jones. So or was that Dow Chemicals? Maybe I need to confirm that. So yeah, a couple of companies out tonight, not the sort of typical ones that people love to trade, like the big tech names, but we'll see if they have any impact. And then next week we've got inflation data and some central bank action as well. So poised to be a choppy one next week as well. Okay, anything to add, gents, before we wrap it up?
No, all sounds good.
I'm good, man.
Excellent. Okay, well, have a great day, everybody, and we will catch you tomorrow.
Cheers.
Bye-bye.
Bye.